And welcome back to the Market Wolf, where I give you the best bear case, the best bull case, and I give you my opinion. If you look at the videos in my video list, I want you to go back and make sure you take a listen to 1128 Nasty Habit of Being Right. I do a measured move on the S&P 500 there, and I show you how far up we could break and how far down we could break down. And this information is so important because both are absolutely massive moves. So make sure you go look at that. That said, I want to get into briefly a look at the S&P 500 just to show you the structure. And I'm going to walk you through today a stock that I'm going to break down for a friend. I've charted it for him. And I just want to let you know I'm setting up a paywall. I'm considering doing $5 a month. And what you would get would be everyday updates on the S&P 500, access to me throughout the day when I do have time to get in there and answer questions. And of course, I'll be watching the market all day so I can show you any changes that might happen. You know, I can predict the setup for what I see each day. But once the market goes into motion, if things don't go exactly as my case plays out, I myself adapt and I can see what's happening. And if you would like to go with me on that journey of chart exploration, then there will be a way for you to do that. Also, I will be breaking down charts you would like to see, like I'm going to do for my friend. And I think what I'll do is for the first 20 people for now, the first 20 people, I will do one free breakdown of a chart that you want to see. So remember, I'm not your financial advisor, but what I will do is I will show you the charts. We can go over the charts together. I'm not going to tell you where to get in. I'm not going to tell you where to get out. I'm not going to tell you that you should even buy the stock or the crypto that you want to see me break down with you. But anyway, that's what I've got planned. So if that sounds good to you, then please let me know. Take a look at the structure on the S&P 500. As I've been pointing out, this is the monthly chart. We've been coiling up for a long time, and this is going to break up or break down in a very large measured move. And so you need to be paying attention to that situation. And I want to take you now to the chart that I've been breaking down for my friend. And many of you may own this stock as well, or you might be interested in owning this stock, eBay. And here we are on the eBay chart. And if you notice, the structure of this chart is very, very similar to the S&P 500. And in fact, when we have had downturns in the market, eBay does essentially follow along with the rest of the market. So that's important to pay attention to. I will say this, that if we have a major correction, a major downturn, if we see major changes in the U.S. market, you've got to remember that eBay is used worldwide. So I believe this is going to be a stock that would potentially have some bounce back. What you're going to want to research for yourself is, okay, well, is eBay mostly composed of buyers that are buying in dollars? Because if we have a transition in markets where the United States begins to fade as a major market power to some degree, and we see other emerging markets in the East begin to rise up and take that place, and they become not only major producers of goods but also major consumers, that could have an impact. But in the short term, but I think even then, over the long term, more than likely eBay survives and does well because it's a worldwide organization, but it's something to consider, something to take into account. Now, you can see we're basically sitting on a giant bear flag here. We've been consolidating for a very, very, very long time, just like we have been on the S&P 500. This is running very similar to the S&P 500. The reason I have these levels down here highlighted in pink is because my friend got in at around $30. So I not only have the major levels on this chart charted out in orange, but I did some sub levels there within that $30 range in case he would want to sell or buy in that order block again. Now, he got in at a pretty good level, and you know what you want to do is get out at the top of the market if possible. It's not always easy to judge where the top of the market is. Let me bring an arrow in here so I can point a few things out to you that are very important about that. So if we look here, we kind of this needle and pin look on top of this candle. That's a sign typically that you're kind of losing momentum and you're probably going to have a downturn, and we can see that here. And then we begin to get a bounce back, right? And even right here, you think, well, we should have gone down, but we flagged. Now, remember, this is monthly, okay? So you got to take into account these candles, where they open and close, all right? So this is a long time of chop in the same area. And you would think, oh, well, this represents the downturn. Now we're going to have a major downturn. No, not necessarily. You got to pay attention to the rest of the market. Okay? And once you're up here, where you see this wick on this candle where it's very long, that's a signal that, hey, we're about to have possibly a move down. And then we did have a big move down month over month, right? And so, maybe you hung in the market for month one, and then maybe even here on month two, you had some hope. Hopefully by this time, you would be getting out and locking in your profits, okay, when you get to this next month here. So that's the ideal, right? Now, if you rode this move to the downside all the way down into this flagging area, well, you've got some decisions to make, right? So if you look at the pattern, here's basically a shoulder, here's a head. Looks like this is basically becoming another shoulder. The question is do we have a move all the way down to about the, do we have a move down to the 2750 and complete that pattern that we see there? Well, that's very important for my friend because he got in at about $30. So if he sees this symmetrical triangle pattern fail to the downside here, he may want to decide to lock in some profit at one of these levels or before he even hits one of these levels. So maybe 35.77, 32.29, etc., etc. Okay? And then, of course, the other thing he has to keep an eye on is if this decides to break up out of this symmetrical and get bullish, perhaps he doesn't want to get greedy. Maybe he just wants to get maybe up to the 57.63, somewhere in there. I wouldn't try to get back to an all-time high. I would find a nice place in this range up here on some of these levels that I marked, 46.41, 45.28, 52.26, probably some of those levels to maybe get out and exit the market. Now, of course, you could ride it up to maybe the 65.33. I really think that's as high as you're going to get before the market rolls itself back over. Okay, you could go higher, but the idea here is not to make as much money as you can. It's not to get greedy. It's to make a reasonable amount of money. And I think a move from buying in at $30, potentially getting all the way back to, you know, 64.99 or somewhere in there, that's an excellent profit. You don't have to catch the top, you just have to make good profit. So something to keep in mind there. Now let's talk about this break, or whether we're going to break up or break down, right? Well, what do we know? Well, we know that the market is really leveraged up right now. The financial institutions are really leveraged up in this area of buying, in this area of consolidation. They've been so they're long, right? And they've been attempting to get corporations and individuals like you back into the market, because they do need this to come up to these order blocks up here that are higher in order to sell and get out of the market themselves. They don't want to get wrecked. Now, of course, their idea is to make as much money as they can as well. So it's not as if these institutions weren't necessarily selling on the downtrend here, because they have machines that do this for them. I'm sure they were, but once we hit this consolidation phase, you know, the machines are going to start buying in again. And so they're leveraged up to the long side. So I think, in all probability, what you're seeing here is a W reversal, and we'll maybe get a bounce here on the bottom side of this blue symmetrical, work our way up, and then confirm on the top side with a few touchdowns, probably on the 30-minute or the 2-hour. I would go with the 2-hour if you're long in the market. And then you'll see an explosive move up over the weeks that will bring us, not that you're not going to back test, you will, but you would probably get an explosive move up. And I think probably the highest you get, to be honest, really would be about 64.99, somewhere in there. Now, for a major breakdown on eBay, again, I think, you know, you take a measured move from this triangle here, and if it were to break down, if you're in at $30, you've got to decide, well, if it falls through this symmetrical triangle, do I want to sell before it even gets to 35.77? And, you know, you could have a back test here. This is a shoulder that's being put on, so, you know, it could bounce off 35.77 and work its way back to 46.41 again, okay? That's a possibility. It depends on how long we continue kind of a consolidation phase here, and how this shoulder might play out and how it might look. But from what I understand, there's not much more room for these institutions to keep buying here to try and lure people back into the market. So something is going to have to happen pretty soon here, I'd say within the next month or two, where we get an explosive move up or down, and that would probably be it. And then your direction is probably going to be locked in for your expansion, whether we have a massive expansion up or down to the downside. So on the downside of this, let's just take a measured move on the downside of eBay here. So let's bring out a trend line, and I'm going to change the color on this just so we can see it a little better, so we can see what this move, or this move up or down, will be. And I think I'll use just there we go, we can see that better. So this is just a rough estimate here. I'm roughing this in. This isn't like I'm getting this absolutely perfect, but it should give us a good idea. Let's go with the break up first from where we currently are. Yeah, you can see that brings you back up to some of those levels that I was talking about. Probably what, maybe 70.97, right? And I'm telling you, what I would personally do is I would get out at about, maybe 63, 62, somewhere in there. What you're looking at is this order block right here. Okay, so just so we're clear, you're looking at the top of these wicks up here, is a place you might get out, or maybe in the middle of this order block right here where it's just consolidation phase. That's where you're going to want to consider getting out potentially. And a move to the downside from where we currently are right now would bring eBay down to $19.73, which is a heck of a move down. Let's take a look at that. $19.73. That's very close to our $19.44 level, so that does make sense. So that would be your move down, the potential move down on eBay from a very big market breakdown. So essentially that's what you have to keep in mind. Now I do want to just show you these Fibonacci retracement levels, just so you have an idea of where you got in. And if you got in on eBay around $30, I think you did good. So let me see if this will allow me to do what I want to do here, because I want to help you understand this Fibonacci chart. And I got another one on the right side. But as you can see, if you got in the $30 range, you got in at essentially what amounts to one of the lower buyback levels in the light green, which is a great move for you. Most people would have been buying inside of this darker green channel right here. And then, of course, you can see it just works its way up from there. And as you're moving up through these channels, you've got to know that eventually you're going to get a retest. Eventually, this is going to come back down to these levels in the buyback range, which this is in. This consolidation phase in this blue symmetrical triangle is inside of this larger, darker green channel here, where typically you'll see people buying back in, and really, it could even come back down into this channel here and then get bullish. But we need to keep in mind this is also inside of this consolidating symmetrical triangle, so if we lose that, it becomes bearish, even if we fall back into this channel. At least in a shorter term scenario, you could get a bounce once you hang around in this channel for a while. As you see right here, you eventually have a further breakdown, then you get a bounce. But that's something to keep an eye on anyway. Very good range to buy in. Now, obviously, the selling point should have been somewhere close to the top here. Don't get greedy. Take your profit. Lock in your profit. Okay. Even if you're a long-term investor on some of these stocks, consider like, hey, you know what? I did really well. I think I'm going to go ahead and take some profit. And maybe you don't take out all of it. Maybe you take half of your investment and you take profit from it, and you leave the other half in. You wait for a move down, and then you put that money back in if you see a point where you want to, and maybe you want to do that on eBay at some point. But if you rode this all the way down and you've been waiting, now you've lost out on a lot of profit, but you still have some good potential here. And so just really quick, let's do a measured move so we can see the percentage that you would make if I can get my brain to work. There's the measured move. My goodness, I need coffee. All right, so now this measured move doesn't ever work very well for me here, but let's say that you got in at exactly $30, somewhere in there. That's pretty close. So essentially you're up. I mean, I know it says negative 34%, right? But you're actually up about positive 34% right now. That's a pretty good profit. Now, let's just see what you could have on a bounce up on some of those estimations. And maybe this will behave, I don't know. See it ought to, let's see, let's get it right about at the $30 mark. Right there. Not easy to do on the iPad. Now let's tap that. All right. And let's bring this up. I mean, if you've gone all the way to the top, I mean, just curious, right? Let's not go to the wick, but let's go up. That's 156% increase. That's an amazing profit right there. But if you get a bounce up to the levels I'm telling you we might get to, like the highest point, it'd be 116% increase. You may want to consider getting out at 104% there, or maybe if you go for an average in that order block, which is also the top of those wicks on the other side, you want to get out at 95%, maybe even 85%. Those are all good levels that you might decide to take profit at if we get a big expansion to the upside out of here. Now, I want to take a little bit closer look at the data on eBay just to see. This is generally going to follow the S&P 500 anyway. So really, if you're following the data on the S&P 500, it's going to tell you what you need to know if you're following my channel daily. Remember, I'm not casting every day now. I will cast probably intermittently on the S&P 500, the DXY, H-bar, Bitcoin, but I'm not going to cast every day. That is going to be for the people that decide to support me behind my paywall and support my work as I help you navigate the charts, work on charts with you. Remember, I'm not your financial advisor. I don't do that kind of thing. I'm not going to tell you that you should certainly buy in here, you should certainly sell here. I give you the bear case, I give you the bull case, I give you some levels you might think about, selling or buying at, and that's all I can do. It's simply my opinion. This is for entertainment, my friends, and education. So please keep that in mind, and we will see you next time on The Market Wolf.